Hello students, how are you all? Are you fine? I, Dr. Lal Babu Jaiswal, Assistant Professor, Faculty of Commerce, Banaras Hind University, Varanasi, Uttar Pradesh, India, is going to present the assessment procedure under the income tax law and accounts. Before it, we have discussed about the TDS and TCS. What are the rates of the TDS and what are the procedures of the TDS? What are the provisions of Income Tax Act 1961 regarding to the tax collection at sources? We have discussed about it. Before it, we have discussed about the tax computation of tax regarding to the association of person, partnership firm, etc. So now I am going to discuss about the assessment procedure. Assessment procedure refers such types of component where the assessee assesses its tax liability. Under it, first is called self-assessment. Self-assessment is a such types of assessment where the assessee assesses its tax liability and submits its return of the income along with TDS in time or in the prescribed periods of the submission line. So dear students, second one is best judgment assessment. Best judgment assessment is such types of assessment where the assessee does not submit its ITR in time and does not submit its tax statement in time to the assigning officer having the power to assess on the basis of its own accord, its own judgment, its own decision. So such types of assessment is called the best judgment assessment. And third one is reassessment. Reassessment is the such types of situation where the assessee assesses its tax liability, its a component of the tax, its a component of the income along with deposit amount of tax, but due to intentionally or due to ignorance, if some items are left, if some items are not considered partially or fully, so these types of items are included again, and this situation is called the reassessment. So dear students, assessment procedure refers such types of activities where the assessee assesses its income, assesses its tax liability, assesses its all types of procedural. Dear students, at the time of assessment procedure, the assessee should be cautious. The assessee should be alert that no items are left, no items should be left out. Each and every items should be included in the income tax return. No deductions should be claimed without any types of documentary proof. No any types of false or fraud, forgery or any types of misinterpretation should be attended by the income tax payer. Income tax payer or assessee should also pay attention those types of component where they follow the rules of assessment procedure according to the Income Tax Act. So dear students, in this regard, I am going to present the procedural assessment under the Income Tax Act 1961. So dear student, assessment procedure means an assessment procedure is defined as a structured process consisting of assessment objectives, methods and objects used to evaluate specific items related to scrutiny, related to security controls. Related to security control means each and every item should be recorded, each and every item should be disclosed at the time of submitting the ITR with accurate or adequate manner. Return of income. The Income Tax Act 1961 contains provision for filing of return. Return of income is a format in which assessee furnishes information as to his total income and tax payable. In the case of total income, income from salary, income from house property, income from business and profession, capital gain, income from other sources, clubbing of income, losses set off and carry forward, computation of gross total income, computation of total income, and computation of gross tax liability as well as next tax liability should be included in the income tax return. Dear student, the format for filing of returns by different assessee is notified by CBDT, Central Board of Direct Tax. Dear student, different assessee format of format means ITR 1, ITR 2, ITR 3, ITR 4, ITR 5, ITR 6, ITR 7. These forms are issued by Central Board of Direct Taxes. Dear students, the particular of income earned under different sets, gross total income, deduction from gross total income, and tax payable by the assessee are generally required to furnish in a return of the income, and assessees should maintain all types of documentary evidence against the claiming of deductions, against the claiming of expenses regarding to respective various heads. Dear student, we can say in brief, a return of income is a declaration of income by the assessee in the prescribed format. Such types of format is framed by the government, and under such types of framed format, the assessee should disclose, the assessee should mention all types of sources of its income, all types of claiming deduction with procedural with the evidence of the documentary proof. So dear students, assessment procedure having the return of income. Return of income is a such types of format which is prescribed by the government, and under it all types of income are recorded as a accurate manner as per Income Tax Act 1961. Dear students, different types of assessee. In the case of different types of assessee, assessment having by taxpayer and by tax authority. Under the taxpayer, self-assessment and reassessments are included. We have also discussed about this. Self-assessment is a such types of assessment where the assessee assessed its total income, its total tax liability, and reassessment is a such types of situation where the assessee assesses its total income, its total tax liability without including any types of transaction fully or partially without fully or partially with any types of region. If any regions are laid down and these regions are not matched to the such types of component where the assessee does not get why these items has been left out prior, then these types of left items are included and assessment are assessed re-basis again basis. So this situation is called reassessment. Dear students, in the case of tax authority, under the case of tax authority, first provisional assessment. In the case of provisional assessment is a such types of assessment where the assessee having the information regarding all types of income, but due to any reason, due to unavoidable condition, if the income tax return is not submitted, so after it the assessing officer, the income tax department provisionally assessed the volume of its income, volume of tax liability. So this is called the provisional assessment. Second one is summary assessment. Summary assessment is a such types of assessment where all information are recorded with the date wise, voucher wise, proof wise, and each and every item having some documentary proof. Next one is security of return. Security of returns means such types of components, such types of situation where the assessee, where the assigning officer attempt all types of security options. All types of security option. Next one is best judgment assessment. Best judgment assessment is a such types of assessment which is also called the ex parte assessment, ex gratia assessment, one side assessment. If the any assessee does not file its return and after the providing the notice, after issuing the notice, the assessee does not submit its report regarding to the income tax return, regarding to the tax liability, and the assigning officer having no information about the assessee, why assessee is not submitting the return of the income, the return of the tax liability. So then the assigning officer will be bound, and the assigning officer seized on the basis of its own record, its own decision, on the basis of previous data. So such types of assessment is called the best judgment assessment, ex parte assessment, ex gratia assessment. Under it there are two types of situation. First, non-filer, and second, unregistered person. Non-filer means a person who is already registered and but not submit its ITR in time, or does not submit at all its information about the income and the taxes. These types of assessment is called best judgment assessment regarding to the non-filers. Unregistered person, if the assigning officer, income tax department found out that so and so person having so and so large volume of the income, but this person is not registered under the income tax department, so in this case the assigning officer taken a decision regarding to the assessment by self. This types of assessment is called best judgment assessment. So dear student, this slide present the different types of assessment. Dear student, return of income, compulsory filing of return of income, section 139 subsection 1. IPS section 139 subsection 1. IPS section 139 subsection 1 represent it is compulsory for the companies and firms to file a return. To file a return, section 139 subsection 1 is related to such types of component where the assessee file its return in time with the accurate manner. A return of income or loss for the previous year in the prescribed forms and verified in the prescribed manner on or before the due date has to be filed by every person. Dear student, each and every person whose total income is excess than the exemption limit should be filed its income tax return under section 139 subsection 1 as per Income Tax Act 1961. If the assessee does not file within the time, its ITR, so then he can file its income return after the date. So such types of assessment is called belated assessment. In the case of belated assessment, some fine is also charged by the government for those person who is defaulter regarding to the income tax return. Dear students, interest for the default in furnishing return of the income. Section 234A. Section 234A refers Section 234 refers for failure to file or return of income. Failure to file or return of income on or before the due date mentioned above. Mentioned above means section 139 subsection 1, that is interest is payable where an assessee furnishes the return of income after due date or does not furnish the return of income. So dear students, it is a humble submission before all of you. Such types of income which is not disclosed, which is not filed as a return of income, the assessee is liable to pay the amount of interest under section 234A of Income Tax Act 1961. Dear student, simple interest at the rate of 1% per month or part of the month is payable for the period commencing from the date immediately following the due date and ending the following dates. So dear students, 1% simple interest is 1% will be charged. Simple interest 1% will be charged. So dear students, in the case of specified class or classes of persons to be exempted from filing return of income, section 139 subsection 1c. Section 139 subsection c refers person required to furnish return of the income. Dear students, every person who falls within the ambit of the condition maintained under prescribed 139 has to be furnished a return of his income on or before the due date is specified under section 139 of subsection 1. For the individual assessee, this will be near about 31st July of the every year. In the case of audited firm, this will be 31st October for every year. It means every person who is required to file its income tax return under the section 139 subsection 1 is called the section 139 subsection 1c is related to the specified class or class of the person be exempted from the filing of the return. Dear students, exemption from filing return of the income. In this case, there is assessee who is exempted to return the file, to submit its income tax return. To reduce the compliance burden of certain type of taxpayer, the central government has been empowered to notify the class or classes of a person who will be exempted from the requirement of filing of return of the income subject to satisfying the prescribed condition. Accordingly, central government has wide notification number 55/2019 dated 26 July 2019 and notification number 49/2023 dated 14 July 2023 exempted non-corporate, non-resident and non-companies in the case having any income chargeable under the Income Tax Act 1961 during the previous year from any investment fund or set up in international financial services located in India from the requirement of furnishing a return under the 139 subsection 1 for the assessment year 1920 onwards. Such types of person who is exempted to filing the ITR whose income is derived from such types of fund which is set up in an international financial services center and situated in India. These types of income will be exempted as a return ITR return. So dear students, return or loss. The return of profit is submitted under the return of the income, but section 139 subsection 3 refers to such types of situation where loss incurred by the assessee. When the loss incurred by the assessee, then such types of loss is also a part of return of the income under section 139 subsection 1. Dear student, compulsory filing return of loss on or before due date to carry forward and set off certain losses. So dear students, Section 80 requires mandatory filing of return of loss under Section 139 subsection 3 on or before the due date is specified under Section 139 subsection 1 for carry forward of the following losses. Dear students, compulsory filing return of loss on or before. So dear student, these losses are also included at the time of ITR filing. These losses are business loss under Section 72 subsection 1 are included under the income tax return. Dear student, speculation business loss under Section 73 subsection 2 is also included under the business loss. Loss from specified business under Section 73A subsection 2 is also a part of return of the income. Loss under the head capital gains is also a part of income tax return Section 74 subsection 1. And loss from the activity of owning and maintaining race horse under Section 74A subsection 3 is also part of the return of the income. So dear students, these losses are also recorded at the time of furnishing the return. Section 139 subsection 4 refers furnishing of belated return of the income. If the assessee does not file its income tax return within a prescribed date, within a date which is given by the government, such types of return, if filed after the due date, so such types of return is called belated return. On the belated return, some fine is also charged by the government. So Section 139 subsection 4 refers any person who has not furnished a return within the time allowed to him under Section 139 subsection 1 may furnish the return for any previous year at any time. Dear students, before 3 months prior to the end of a relevant assessment year, Section 31st December 2024 for the previous year 23-24. Before 3 months prior to the date of the relevant assessment year, before the completion of the assessment whichever earlier, and thus a belated return can be filed only in case of a person has not furnished his return within the time allowed. Section 139 subsection 1. These are the terminology of the belated return. Belated return means such types of return which is not submitted. Belated return is situation is arising when the return is not submitted under Section 139 subsection 1 of Income Tax Act 1961. So dear student, belated return is given under Section 139 subsection 4. Dear students, what are the consequences of the belated return? There are some types of benefits which may be benefited by the taxpayer, but in the case of belated return, these benefits are not provided by the income tax department. First, certain losses computed under the specified section. Certain losses under the specified section cannot be carried forward for set off in the subsequent year. In the case of belated return, losses set up and carry forward practice is not applied. Second one is interest under Section 234A for the delay in furnishing the return shall be leviable. It means it will be charged. Next, fee rupees 5,000 under Section 234F would be leviable where the return is filed after the due date. However, late fees shall not exceed rupees 1,000 which where the total income does not exceed rupees 5 lakh. When the total income is exceed rupees 5 lakh and but not exceed rupees 10 lakh, so the late fees will be charged by the government rupees 5,000 per year per return. So these students, these are the consequences of the belated returns. Dear student, further, As per section 80 AC, deduction in respect of certain incomes, chapter 6A would not be available. In the case of belated return, deduction under chapter 6A cannot be claimed. Dear students, additionally, with effect from assessment year 24-25, no deduction under section 10AA shall be available to an eligible unit established in a special economic zone if it falls to furnish its return of income on or before the due date. So, dear students, these are the consequences of the belated return. Dear student, section 139 subsection 5 is related to the revised return. Revised return, if any assessee filed its ITR and this ITR is not filed as per the provision of Income Tax Act, so then in this case return can be revised, and such types of return are revised under section 139 subsection 5 of Income Tax Act 1961. If any person having furnished a return section 139 subsection 1 or section 139 subsection 4 discovers any omission or any wrong statement therein, he may furnish a revised return. Dear student, at any time before 3 months prior to the end of the relevant assessment year, whichever is less. So, dear student, revised returns should be filed up to the date of the relevant assessment year. It means present assessment year is running 2025-26. So, the revised return may be submitted up to 31st March 2026. Dear students, the return can be revised. The return can be revised for any number of times within the given time limit. Any number of time it may be revised. In this case, the latest revised return file replaces all file return earlier. Dear students, revised return may be noted that the returns filed under subsection 1A, subclass 3, 4A to 4F of section 139 are treated as a having filed under section 139(1). Hence, these return can be revised subject to satisfying the condition section 139 subsection 5. So, dear students, this is the provision of the revised return under section 139 subsection 5. Section 139 subsection 9, 139(9) defective return. Defective returns are the returns where the assessee does not show the earned income, where the assessee claim the amount volume of the deduction without any documentary proof, or such types of deduction which is claimed which is not related at all or partially related to the assessee, and there is no any types of evidentially record evidentiary proof that the assessee should claim such types of deduction. So, in this case, the assessee do such types of activities. So, that types of statement is called the defective return under section 139 subsection 9. So, under this subsection, the assessing officer has to power to call upon the assessee to rectify a defective return. Assigning officer generally assigning officer give the time to revise the defective return under section 139 subsection 9. If any assessee does not rectify its defective return, so then it means the assessing officer having the power to assess on the basis of best judgment assessment. Dear student, where the assigning officer consists that the return of income furnished by the assessee is defective, he may he may intimate to the assessee and give him an opportunity to rectify the defective return within a period of the time. Generally, time is given by the assessing officer of 15 days from the date of intimation. The assessing officer has to discretion to extend the time period beyond to 15 days on an application made by the assessee. If the assessee give the application that he is not capable to submit its revised return within the 15 days, so then the assessing officer may extend the date of submission from 15 days to some days. Dear student, if the defect is not rectified within a period of 15 days or such a further extended period, then the return would be treated as an invalid, and the consequential effect would be the same as if the assessee had not filed or had failed to furnish the return of income. So, dear students, the assessee should file within a prescribed time which is given by the assessing officer. Dear students, this slide represents the self-assessment tax. Self-assessment tax means payment of tax in fee before furnishing return, or all types of collection of the taxes, relief of the claim, relief of the tax claimed. Dear students, deduction of the tax claimed under section 189, 90 to 90A, 91 is assessed on self basis. So, this types of assessment is called the self-assessment. In the case of self-assessment, assessee deposit the required tax amount by itself. Assessee compute its gross total income, tax liability itself. Dear students, this types of assessment is called the self-assessment. Dear students, and next one is section 144 regarding to the best judgment assessment. Best judgment assessment. In the case of best judgment assessment situation will be arise when the assessee failed to file return under section 139 subsection 1 and has not filed belated return under section 139 subsection 4 or revised return under section 139 subsection 5 or updated return under section 139 8A. Dear student, best judgment assessment situation will be arising when the assessee fails to comply within all the terms of the notice issued under section 142 subsection 1 or a direction issued under section 142 subsection 2A are applied regarding to the best judgment assessment. Best judgment assessment is also applied where the assessee having filed a return fails to comply with all terms of a notice issued section 143 subsection 2. So, in these types of situation, under these types of situation, best judgment assessment process will be arising. So, dear students, with the help of assessment procedure, with the help of the various types of assessment procedure, I tried to discuss each and every item. So, I hope you got each and every point regarding this. If any confusion, any query, so please call me, contact me without any hesitations. So, thanks to all of you. Thanks again to all of you. I will meet with the new topic with new chapter in next class. So, thanks again to all of you.